Hey guys, how's it going? Shane with Eastman Insurance Solutions, and today we are tackling the topic of insurance myths. And when I say insurance myths, I don't mean, hey, if you buy a red car, you're going to have higher insurance. That's kind of a grandmother's tale that she used on you not to buy that little red zippy sports car. I'm talking about real insurance myths that if are not debunked in your personal day-to-day life could end up costing you a pretty penny. So let's get into it. Myth number one: I should buy insurance coverage for my house based on real estate market value. That is false. Homeowners insurance policies need to cover reconstruction costs, not market value, because what you purchased your home for or what the value of your home for is insignificant when it comes to repairing and replacing things in your home. Myth number two: if your car is totaled in an accident, you are off the hook for car payments. Again, false. That's why they sell gap insurance. On average, a car depreciates in value 20% the minute that you drive it off of the lot, and therefore you really never catch up with value of the vehicle. And at time of loss, if it is a total loss, you are still responsible for your payments. So make sure that you keep in good contact with your bank, or you could end up with a late payment on your credit score. Myth number three: if I cause a crash with extensive damages to others, my insurance company is going to cancel me immediately. Incorrect as well. Nothing can happen on an insurance policy outside of the renewal date. So if it's an accident, if it's a ticket, if a ticket falls off, everything happens at renewal date. That's the contract that you enter into. They can't change things on you midterm. So rest assured, you at least have till the end of the term to figure out what your strategy is going to be moving forward. Myth number four: if your car is damaged in an accident, insurance will always cover a rental car. If you do not purchase rental car reimbursement and your accident is your fault, your insurance company is not bound by obligation to provide you with the rental car, so you will be hoofing it or you will be paying out of pocket. So make sure that you purchase that rental car coverage. Myth number five: insurance rates decrease when you turn 25. Also incorrect. Used to be a lot more prevalent. Used to be the reality of the situation. However, in today's day and age, people are actually waiting a little bit longer to go out and get their driver's license, and so insurance companies have shifted from an age to a driving experience model. So as you incur more and more driving experience, your insurance rates will decrease. Myth number six. This is one of my favorites. I get asked this question quite often. When my car is paid off, I no longer need full coverage. Also incorrect. The loan value of your vehicle has nothing to do with the value of your vehicle. And if you happen to be diligent and pay that car off quickly and it's still worth 10, 15, 20 grand, do you really want to risk not having full coverage on that car just because you don't have a bank note on it? Probably not. Myth number seven: your landlord's insurance policy covers your stuff. Also incorrect. If you have a fire at your property and you are a renter, when your rental, either property management company or the owner of the property shows up on scene, you guys are going to get into an interaction, and he's going or she's going to let you know that there is no coverage on their insurance policy for your stuff. Super important that you buy a renter's insurance policy because it's about as inexpensive as you can get on an insurance policy, and typically the discount that you get on for having your auto and your renters with the same company covers the cost of your renter's insurance. So call your insurance agent stat. Myth number eight: if my friend borrows my car and crashes it, their insurance company will pay for the damage. also incorrect. Your insurance, your car, your insurance is primary. Your insurance company will cover the costs of the damage if it is a covered claim. Their insurance may be a secondary in certain circumstances, but your car, your coverage, your responsibility. Myth number 9. Only breadwinners need life insurance coverage. That is absolutely false. I read a study or a statistical analysis on the cost to replace a stay-at-home mom, somewhere in the ballpark of $200,000 a year when you factor in everything that goes into that. So that is incorrect. You need to look at life insurance coverage for both parties, anybody and everybody. Life insurance is a great thing to purchase. I don't care if you're the breadwinner or not. And myth number 10. This one hits close to home for me. Myth number 10. You don't need an insurance agent. Just go online, buy that insurance policy on your computer in your underwear at 1 o'clock in the morning. Or, hey, call up and purchase that insurance policy with that answering service in the Philippines. That is absolutely and utterly ignorant and incorrect. You definitely need a knowledgeable insurance agent in your corner. It does not cost you anything extra to have an insurance agent at your disposal. And more often than not, a good insurance agent will save you over the long run than cost you. From a claim standpoint, from an experience standpoint. So, myth shattered, absolutely and utterly ignorant. Anyway, I hope you guys have I hope you guys have enjoyed these 10 insurance myths. And if there's anything that we can do for you, please don't hesitate to give us a call. If there's a myth that we dispelled and you want some more information on it, or there's another one that we didn't catch and you have questions on it, hey, give us a call, shoot us a message. We are here to help and be of value to you. All right, guys, have a great day, and we will catch you on the next one.